Hey everyone. Micron is an interesting stock for investors looking to capitalize on the increasing effectiveness of artificial intelligence. Micron Technology Management expects its demand for its products to increase as more personal computers and mobile phones and mobile devices are infused with AI capabilities. So let's take a closer look at Micron Technology and determine if this is an excellent AI stock to buy for long-term investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So over a 10-year period, you can see Micron Technologies revenue is cyclical to be sure. You can see the big ups and downs here in its revenue, and it deals with the cyclical industry. Demand for its products are cyclical. The launch of next generation technology, the launch of a new smartphone or a new PC cycle really boosts demand for its product, and recently demand for its product has come down considerably. That's because many individuals bought computers, mobile phones, electronics, all of that in 2020 and 2021 when people were spending more time at home. And you could see that big surge in demand here for Micron Technology, jumping from around 19 billion in revenue all the way up over 32 billion in revenue in a trailing 12-month period. Well, when economies reopened, people started spending more of their money on away from home experiences and less money on electronics, computers, mobile phones, things of that nature where Micron Technology benefits. That's likely to persist at least for one more quarter, but Micron Technology thinks demand is going to increase starting in the next few quarters and the next few years because people that bought computers in 2020, 2021 or mobile phones in 2020, 2021, they didn't need to replace it in 2022 and probably not even in 2023, right? These devices last several years. But starting in 2024 is when things you bought in 2020 start to become outdated. A phone you bought 4 years ago is now becoming outdated. A personal computer you bought 4 years ago is now becoming outdated and starting to, well, you don't necessarily have to replace it, but if you're someone that is using your computer for everyday work like I do, a 4-year-old computer would be too old. You would need to upgrade. I would need to upgrade that to be up with the latest technology. And so now that's driving some demand for Micron's products, and the inventory in the industry has worked through. So that's all looking good for Micron going forward. Management expects revenue to surge over the next couple of years. In fact, even Wall Street is optimistic on Micron Technology revenue over the next few years. For 2024, Wall Street expects 46% revenue growth for Micron Technology. For 2025, they expect another 41% revenue growth year for Micron Technology. So 2 straight years of over 40% revenue growth expected for Micron Technology. And again, a cyclical upturn now. So their downturn has ended and now the upturn is beginning. So this is where Wall Street thinks the rebound is just getting started for Micron Technology, and it'll last for 2 years before slowing down in 2026 to growth of just 6.8%. So as revenue collapsed for Micron Technology in 2023, so did its operating profitability, all the way down to negative 39.36% in the most recent trailing 12-month period. Although if you look back longer term, the company had no trouble generating strong profit margins, close to 40% operating profit margin around 2019, before this cyclical downturn really drew its profit margins down. Now, as the company returns to that upside, it's not surprising to expect it to increase profitability. Maybe not in 2024, but starting in 2025 and certainly in 2026, you can expect Micron Technology's operating profit margin to return up to those higher levels achieved in 2017, 2019, 2020. It will take time for the recovery to take place, but like in other cycles, Wall Street and management says it's starting and it's underway and it will continue because they have foresight into the next couple of years of what their demand looks like for their products. Additionally, cash flow from operations Cash flow from operations is one of the most vital metrics I consider when making an investment decision. If any financial shenanigans are happening, looking at this metric can help uncover the fraud. Moreover, looking at profitability without considering cash flow from operations can lead to a misleading picture of a company's performance. For instance, look at the example I have created here. The company reported a net loss of $250. However, when you look at the cash flow from operations, it was a gain of $35. How can that be? Well, two expenses a company must report on the income statement are depreciation and stock-based compensation. Importantly, these are non-cash expenses. Money is not leaving the company for these expenses. In the case of depreciation, when a company buys a machine for $750, it pays all of that price up front. However, generally accepted accounting principles require that the company take the expense over a period the machine is expected to operate. So if the machine is expected to last for 10 years, the annual expense will be $75 per year for 10 years, even though the company paid the $750 cash at the time of the purchase. Also, when a company offers its employees a stock option, it's not parting with cash. However, it must record the cash value of the option as an expense on the income statement. So moving on to the working capital items, inventory management is the easiest way a company can increase cash flow. The simplest case is when a business has 100 inventory units, sells 30 units, and doesn't replace those units. The decision would reduce total inventory and increase cash flow. As you might already be thinking, this isn't sustainable. Eventually, the company will deplete all its inventory and go out of business. Accounts payable is the money that a company owes another company and has not paid yet. And accounts receivable is the opposite. A company can increase its cash flow by collecting payments faster and paying suppliers slower. If done with skill, companies at scale can take advantage of these timing differences to boost cash flow by a couple of percent annually. Costco is one example that employs this strategy masterfully. Overall, if you observe cash flow increasing unsustainably, you should expect a reversal of that trend. The other big risk to consider is if you see a company reporting substantial profits but negative or weak cash flow due to rising accounts receivable. So now that you understand the importance of that metric, you can see Micron Technology still positive in this metric despite the fact that it was negative in operating profitability, 12.47% in the most recent trailing 12-month period. But you could see the potential of this business achieving 60% cash flow from operations to sales during a brief time in between 2018 and 2019 that demonstrates to investors that the company does have potential when it's operating near full capacity, when it's operating at the height of the economic cycle. Now, it's in the early stages, it's nowhere near that height, but investors considering the stock now could see that growth going forward. Now, this is not for sure that it's going to rebound and recover to this level, but this just demonstrates the potential for Micron Technology. It's proven it, it's shown where it could be. And finally, I wanted to look at valuation and measuring by a forward price to earnings ratio of 13.35. The stock is inexpensive, even though relatively speaking, a 13.35 is near the higher end of where this stock has traded for. This gap area here is when the forward PE was expected to be negative, so you don't get information on this chart for those time periods. But going forward, you can look at it because forward earnings are expected to be positive. 13.35 is not expensive for a company that's expected to grow at 40% on the top line for the next 2 years and has demonstrated phenomenal potential when it's operating at the height of the cycle. So all of these things considered, I would say yes, Micron Technology is a stock you can buy for long-term investors. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.